heart of where innovation, money, and power collide in Silicon Valley and beyond. This is Bloomberg Technology with Caroline Hyde and Ed Ludlow.
Live from New York, this is Bloomberg Technology. Coming up, a victory for Micron as the company gets its awaited $6 billion grant from the US government. We discuss. Plus, we break down the tech earnings with Oracle falling the most in a year after posting lukewarm quarterly revenues. And we sit down with the CEOs of Omnicom and Interpublic to dissect the deal creating the world's largest advertising company. But first, we check in on these markets. The key points contributor to the upside on the NASDAQ, which does hold in the green, is up 3.7%. It's all about Alphabet. Look, actually, we had that head of quantum AI on the show yesterday discussing the breakthroughs they're making in quantum computing in the Willow chip. And this really feeds into a, well, virtuous cycle as to whether it's about quantum AI and cloud. All eyes on Alphabet. Move on and someone look at the drags to the downside. A lot of them in the chips namespace. But software also, we're looking at cloud and software with Oracle off by 7%, at one point down as much as 10%, as look, an 80% ramp up in these shares so far this year, therefore had a high bar for its earnings. And look, the forecast didn't beat expectations, neither did the 9% growth in revenue, even though they did deliver in cloud infrastructure. I'm looking at TSMC, also a name that's up 80% so far this year. We're down 1.7%, even though they show that November sales are ramping ever higher, more than 30%. We dig into that in a minute. Micron as well, off by 2.2%, although finally they get certainty around that $6 billion grant coming from the CHIPS Act, coming from the US government to be able to expand memory offering and manufacturing here in the United States. It's a relief. Let's talk about it with Peter Elstrom. And Peter, I'm interested as to this is a relief. It was an overhang on the stock because we're worried that maybe the Trump administration would deny it.
Yeah, that's exactly right. This is a program where the Biden administration has tried to rebuild the semiconductor industry in the United States. The CHIPS Act is one of the landmark programs that the administration had, and they wanted to make sure that they locked down this money because Trump personally had criticized these agreements as so bad, and the Republicans had even floated the idea that maybe they try to repeal this, even though it was passed with bipartisan support. So the Commerce Department is trying to lock down these agreements now and finalize the details as much as they can before there's this transition in January. So Micron, the really big U.S. maker of memory chips, won this award, more than $6 billion. That's going to help them build out facilities in Idaho and New York, two very key states, and try to build up their ability to develop more advanced memory chips, including these HBM memory chips that are used with AI, the ones from NVIDIA, to be able to train AI models.
Well, the manufacturing king is, of course, TSMC, and they're just showing how still that focus on AI is a living, breathing thing, even though we'd had perhaps been worried about the build-out of databases and more broadly slowing down.
That's right. TSMC sits in an unusual market. In Taiwan, companies have to report their monthly sales. So we get little dribs and drabs of information throughout the quarter before we get the final results. So these are mostly just revenue that the company puts out there. But what we did see from TSMC is that revenue is up more than 30%, as you said. They are a bellwether for AI because they make the most advanced chips in the industry, including the chips that NVIDIA uses to be able to sell to the likes of Microsoft and OpenAI and Google. So it gives us an early indication of how that demand is holding up. One of the big questions overhanging the whole AI boom at this point is whether companies are going to be able to figure out whether there's a profitable way to deploy these models, whether they can actually make some money after investing really tens of billions of dollars at this point. TSMC is getting a lot of that benefit right now. The question is whether it's a long-term trend that TSMC and others are going to be able to benefit from, or whether there's some tapering that comes up if the profits don't materialize pretty soon.
What is the killer application? Peter Elstrom, thanks so much. Breaking down chip makers. Meanwhile, let's stick with Chinese President Xi Jinping saying that China has full confidence in achieving its 5% economic growth target this year. He also told international economic organizations gathered in Beijing that China is willing to maintain and promote the development of relations with the U.S. Just take a listen.
I have repeatedly emphasized that human beings are a community of shared future. We should treat each other's development as an opportunity rather than a challenge. We should see each other as partners rather than rivals. Let solidarity, unity, cooperation Mutual benefit and win-win progress become the main theme of the times.
And of course, Micron and Nvidia have been under pressure with rising tensions, for example, between the US and China and what that means for some US chip makers. Let's dig into those tensions and indeed economic growth more broadly with Janet Mui, who's just head of market analysis at RBC Brewin Dolphin. And interestingly, you've been, I wouldn't say full out positive, but leaning on some interest in Chinese names and Chinese economic stimulus that seems to be being promised more forcefully.
Hi, Caroline. Thanks for having me. So primarily, our strongest conviction is U.S. stocks, particularly because of the U.S. exceptionalism. I think this theme is still going to trade into the new year. And the fact that U.S. companies are just so much more profitable. So we still much prefer U.S. stocks versus the rest of the world. However, for Chinese stocks, I think, sentiment has been very depressed. I think, investors are still doubtful on the scale of the stimulus and whether it is going to work. So it is not that much of a consensus trade. I think this trade is having still a lot of resistance, and we feel that sentiment has been way too negative, and valuations are very cheap. There is a case to make that there could be more stimulus coming, and the fact that economic data is stabilizing. So I think there's a case for investors to diversify a bit into the Chinese stocks as well.
Small overweight in Asia, ex-Japan, on the back of that. What of, therefore, the daily deluge we get on ramping up China-US tensions? Yesterday, it was about Nvidia being investigated by Chinese regulators. There's an ongoing narrative around Micron as well. How have you been trying to price that in?
Well, I have to say it is very difficult to price it in. I do believe that institutional investors have somewhat been more prepared this time, and you can see that in some of the sell-off in the trade-exposed stocks, for example, European ex-UK stocks, for instance. So I think investors have already been making some adjustments and thoughts on the trade tariff issue. It's very difficult to price in, but I guess some of that is already reflected in market. And overall speaking, our view is that the trade tariffs likely going to be a tit-for-tat and negotiation tactics. Doubtful that the full extent of the threat is going to be fully implemented, although it is acknowledged that some of that will be through. So keeping an eye on that, but it's not necessarily a deterrent to the ongoing rally in the U.S. equity market, for example.
Okay, so the likes of an Nvidia that has got an enormous valuation continued to rally throughout 2024. Does that continue into 2025? Can we vindicate these valuations, the run-up that we've seen in stocks, like an 80% up on Oracle and 80% up on the listed depository notes of TSMC?
Yeah, you singled out Nvidia there. I'm not going to make a specific comment, but this is obviously a great stock, huge profit margins, and still very strong guidance of the Blackwell chip architecture. And I think, this is a great company. Obviously, investors have this doubt on the high valuation. I think the rally can still go on, given that investors still like strong quality growth. So I would feel that investors will still be very much leaning on the semiconductor sector and then tech in general, large cap in general in the US. I also feel that investors are more shifting and rotating into more software related stocks instead of just the semis hardware. I think that makes sense because there is likely to be more commercialization potential and realization as AI moves forward from the infrastructure build out to the inferencing and to the applications.
We'll have names like Palantir coming up in the show a little bit later. Janet Mui, great to get your expertise, head of market analysis at RBC Brewin Dolphin. Thank you. Coming up, C3AI's focus on generative AI. Well, the products there are helping drive revenue, but at what cost? Company CEO Tom Siebel joins us next. Meanwhile, let's just check it back in on Alphabet, which we'd said had been rallying almost 4%, having its best day at one point since April 2024. Here's what Google quantum AI founder Hartmut Neven told us yesterday.
Quantum computing is definitely not that field. There is steady progress, and our new chip that we just released, Willow, will form the basis to start doing useful computations that will enable or solve problems that humankind has.
to another set of earnings for you. C3 AI raising its full-year sales forecast. Generative AI, of course, helping drive sales, but analysts kind of cautioning of the lack of profitability in some areas. Joining us for more, C3 AI CEO Tom Siebel. Look, your shares are down a little bit, but boy, they've ramped up 60% in less than a month. So a lot of optimism going into these numbers. What drove you to raise the forecast?
Well, it was a great quarter. The year to date has been great. I think our revenue growth year over year last quarter was 29%, which is huge. I think most importantly, we formed this in a massive strategic alliance with Microsoft, the largest software company in the world, and all of Microsoft Azure's salespeople worldwide will be selling C3 AI's enterprise AI software solutions, on their price list, getting quota credit, being compensated. And so C3 AI goes from order of 100 salespeople in September to order of perhaps tens of thousands of salespeople in November. So that is a very strong tailwind that bodes extraordinarily well for C3 AI.
There is, though, this slight worry about the profitability, saying that basically revenue, you're prioritizing growth rather than profitability. What do you say to that, Tom?
In the short term, we're prioritizing growth. I have this huge enterprise sales engine in the form of Microsoft that now we need to enable, and for me to not invest in that channel to get thousands of people productive selling and servicing our product, and not invest in that is crazy. Goodness, Caroline, we have roughly three-quarters of $1 billion cash in the bank, and what am I going to do with that if not invest in growth, and not invest in market share, if not invest in market leadership? And I assure you, the cash flow and profitability follows.
Okay, so how profitable, for example, would a deal like Microsoft, the extension there, be? Because you're obviously digging in on that partnership. They help distribute your offerings. But how much revenue do you have to give up for that?
Actually, virtually 100% of the revenue from the C3 AI sales accrues to C3 AI. So it's, Microsoft gets the benefit of selling their infrastructure and cloud services. C3 gets the benefit of selling the C3 AI applications, but a very small portion of the revenue is given up, and this is just a dramatic revenue accelerator. This is the largest software company in the world, and they have chosen C3 AI as their preferred enterprise AI solutions provider. Strategic partnerships just don't get bigger than this.
They don't, and certainly Piper and the analysts over there saying this potentially drives material upside. There are, though, and I hate to keep going back to some of the flies in the ointment, but KeyBank, just worrying about the differentiation here, Tom, of your AI offering. How do you make clear your USP versus rivals out there?
There's one company on the planet Earth, Caroline, that offers over 100 turnkey enterprise AI applications for utilities, for oil and gas, for defense, for intelligence, for pharmaceutical, for telecom. One company on the planet Earth, okay, that offers these kinds of solutions, and that is our differentiation.
And federal strength, you listed a lot there within defense, and with ultimately you've got a government focus in many ways that has seen a lot of selling into federal. Will that continue? Any issues about the administration coming on in 2025 under Trump?
Our business in the defense, intelligence, and federal community has been very strong. I expect that to accelerate in the Trump administration with people like Elon getting involved. I think their priorities, if we listen to their conferences and we go to, for example, the Reagan Defense Forum that took place last week, there is one topic on the agenda, and that is AI applications, AI applications, AI applications, and then they also talk about cyber. But this is clearly going to be a huge priority for making government more efficient, okay, and it is the future of our defense and intelligence community. So this bodes extraordinarily well for the commercial software providers like C3 AI, and perhaps bodes less well for the traditional kind of beltway systems integrators. I think that the tide might be going out for those guys.
Tom Siebel, optimistic on C3 AI, of course, the CEO. Thanks for joining us today. Let's stick with earnings, and let's just check out what's happening with Oracle, because It has been on a tear of late, up 80% in terms of share price this year, and therefore its optimism didn't live up to, well, the hype was there, but the numbers didn't quite meet that hype. We're down 7% after we saw 9% increase in revenue. There was strong cloud infrastructure growth, though. Anurag Rana breaks it down from Bloomberg Intelligence. It just wasn't enough, was it?
See, they did beat on constant currency. So in the reported, they were slightly below, but that was FX oriented. But at the same time, I think, as you mentioned, the expectations are really getting high for some of these names that the beat has to be of a material enough, range. We think the demand is still there. It's a question is whether the second half growth rate is going to be in the high 50s or the low 50s. But still, that's a pretty impressive number, all said and done.
That 50% is a 52% increase in cloud infrastructure sales that you sort of referenced. What about the rest of the business? How is just cloud continuing to perform for them? How are software sales going?
Yeah, see, when you look at Oracle, before the Oracle cloud infrastructure really push happened, this company was growing at that 4, 5, 6% range. So when you look at their SaaS business or the cloud applications business, that grew about 10%. Which is generally in line with what's happening with Salesforce and Workday. Workday slightly better than that. But that space has been under pressure over the last 12 months. The real area of growth is cloud infrastructure, or because of AI workloads. And that's where bulk of the interest lies at this point.
Any mention around TikTok? Because they're a key client.
Yeah, no, that wasn't really discussed in the, on the call. But we think if there is an impact next year, first of all, that's not going to be immediate. It's going to take some time. But because of the backlog that they have, they should be able to offset that risk. With that, maybe a quarter or two of some dent there. But, overall, we think the backlog is there for that.
And they mentioned new clients, Meta in particular, and increasing focus on that particular area. But anyone else that we were impressed by that they managed to snag, that they're managing to woo in with the fact that it is a key offering now in cloud, whereas we doubted it previously?
Yeah, so one of the things I would say is almost all major clients out there, whether that's Meta or any other vendor, is going to go out and try to tap into all cloud providers. I mean, unless they have some adversarial relationship, just because there isn't that much of capacity out there. In Oracle's case, it's actually getting work from Microsoft right now because Microsoft is fulfilling the needs or the workloads that are coming from OpenAI, and it's subleasing to Oracle to get some of that work done. So there is, the entire space is going up. It's not just one or two vendors.
Anurag Rana on all things Oracle. We thank you, Bloomberg Intelligence. Meanwhile, coming up, we're going to be going out to Bloomberg's Women, Money and Power event. It's happening today in London for a conversation, you guessed it, on AI and fintech. Stay with us for that. Meanwhile, just check in on some other surprising rallies that maybe have gone unnoticed. Today, Apple's off by 0.4%, but if you track it over the month of November, the stock is up 9%. Despite slow revenue growth, despite tariff-related risks, investors are still pretty optimistic about its ability to navigate all of that and, of course, the Apple Intelligence offering. This is Bloomberg Technology. Time now for Talking Tech. First up, a DoorDash-funded study in Pennsylvania found that most of its gig workers prefer to remain independent contractors. This after the company began offering extra payments instead of benefits normally reserved for salaried employees. Plus, TikTok Shop comes to Europe after the in-app shopping feature went live for users in Spain. The rollout reflects TikTok's push to seek out alternative markets in the face of potential US shutout. And the shares of food delivery firm Talabat, well, it lost ground after a $2 billion IPO in Dubai, the Gulf's biggest initial public offering this year. This adds to a slate of recent disappointing debuts of listings in the Middle East. Now let's just talk geopolitics a little bit more now, because despite US and ally sanctions following Russia's invasion of Ukraine, Moscow has continued its ability to procure American tech, including chips from Intel Analog Devices, TI. Bloomberg reporting that it's discovered that the supply chain path which Russia has been able to secure those components, unbeknownst to the companies making it, has been pretty easy. For more, Bloomberg's Alberto Nadelli joins us now. It's an extraordinary deep dive. Alberto, just how easy is it to order these sorts of pieces of equipment from Russia right now?
It's relatively simple if you think about the fact that, it's been a few years now that the war has been ongoing in Ukraine and the effort that governments have put on to crack down on these practices. There are websites within Russia where companies that are working to produce missiles and other weapons, they can see the catalogs of companies like Texas Instruments on their own website, so stocks available, prices, and details like that. And then they're able to place order requests with Russian distributors, and then the goods are ordered by intermediaries. They get sent to third countries, other countries, and from there they get to Russia. So overall, that's pretty simple given the fact that the war has been going on for years now.
Precisely, and the US government has time and time again been warning these sorts of suppliers to crack down on this. In fact, Shannon Thompson, the company's assistant general counsel, that's for Texas Instruments, said, I want to be very clear, TI strongly opposes the use of our chips in Russian military equipment. How are they able to stop this?
That's a very good question, and probably a question for the companies more than for me. I think companies are trying to stop these practices from happening. And when issues are flagged, they do intervene. There was, however, for example, earlier this year, a Senate report that came out that suggested that companies aren't doing enough. So they are doing certain practices that would allow them to probably better detect these types of transactions before they actually happen. So lots of the actions happen later on in the sales process, right, rather than early on trying to identify bad actors and things like that.
Alberto Nadelli, extraordinary piece. Thank you for talking us through it. Coming up, Omnicom set to acquire Interpublic Group, creating the world's largest ad company. We speak exclusively with the CEOs. This is Bloomberg Technology. Welcome back to Bloomberg Technology. I'm Caroline Hyde in New York. We want to welcome our TV and radio audiences worldwide now to Bloomberg Technology because Omnicom has announced that they'll be buying Interpublic Group in a move that will create the world's largest advertising company with an annual revenue of more than $25 billion. Here to discuss in an exclusive interview, John Wren, Omnicom CEO, and Philippe Krakowski, Interpublic Group CEO. Gentlemen, welcome.
Thank you, Caroline.
Thank you.
John, I'm sat here on the technology show thinking about the technological disruption that has happened to advertising. Is this in response to that? Is this to take on Alphabet, Meta, and claw back more of that global revenue?
Well, it is. Technology does play a role in this, and both Philippe and I have focused on that in our conversations over the course of the last year. When you cut through quite a bit of what we're discussing, if you look at our industry, 5 years ago, 10 years ago, the barrier to entry was very low. It was, you just had to be a brilliant person, right? With a great
Just a bit of brilliance.
Yeah, with a great idea. Now, in order to properly service clients in this new era, it's key to have those very, very bright, very talented people. But it's incumbent upon us to enable them with the best tech and data that we possibly can for them to garner the insights, the information at scale so they can react to the environment as they need. And we've each been on that journey, I guess, as all of our competitors have as well. From an Omnicom point of view, we've made great strides with the creation of Omni and earlier in the year when we acquired Flywheel, the commerce data that we've been able to put together. And that's progresses, and today we're working even betaing all the generative AI possibilities to create tools for our folks. Philippe on the other side can talk to it as well because he's at a very strong bench.
Sure. I mean, I think to John's point, technology is playing so much more important a role in our sector, and that's because for our clients, the consumers they need to reach expect a high degree of personalization in the messaging they get, and a high degree of engagement in the experiences we deliver. Yeah. So to John's point, he brought Flywheel into the family. It's a company that has this quite distinctive ability to understand everything that's happening in the digital retail ecosystem down to the individual transaction level. And then for us, Axiom, as John said, is likely the largest consumer database outside of the walled gardens. So if you put those two together, and if we co-invest in generative AI, we're very, very strongly positioned, we believe, to help our clients navigate this tech-enabled world.
How does it strip out costs? You clearly identified opportunities for $750 million in annual cost savings, but the talent, when it comes to generative AI, is expensive. So, Philippe, how do you strip out those costs?
Well, I think John's been really clear, and I think we are fully in agreement a year in that it's about enabling the folks who interact with the clients, those brilliant people, giving them more tools. There are ways in which we're not going to invest more than once, and we are going to look at infrastructure that is perhaps legacy infrastructure in businesses like ours. So there is a meaningful opportunity there to put the money against the future.
John, some of the concern may be being priced in at the moment because as combined market capitalizations, they're now lower than they were on Friday. People are trying to digest how this deal works. Citi, Bernstein saying the potential for revenue dyssynergy, rival agencies stealing accounts, talent. How do you make sure that people stay on board with you?
Sure. We've always been the place for the best talented people to come to. Naturally, there's churn in everybody's business every year. Fortunately or unfortunately, I've been through this movie once before, but did it badly and didn't complete it 10 years ago. This one is a lot more thoughtful.
You're referring to the Publicis deal back in 2014.
Yes. But clients who listen to us and see the capabilities that we've developed between us already, the power of what we're going to be able to continually bring to the marketplace, the changes in the focus and the single point of entry and investment that we're going to make to enable that talent to succeed. I'm not nearly as concerned as the naysayers are looking for some way to knock on the deal, that we may be challenged by the odd client or two. I suspect not, because I think the offerings that we have and the response to those clients is at the core of what we've been discussing for the last year. And that's been first and foremost. So we've been focused on what is this going to mean for our clients? What is this going to mean for our talent? What is it going to mean for us attracting talent going forward and enabling those people? And most very talented people want to work with and for the very best and brightest and have available to them the most state-of-the-art tools. And that's what we'll be providing. And progress is every day. I mean, I haven't even focused in on what the advances that I'm very familiar with, Sarah, but what was going on this morning.
OpenAI story,
yeah. And that has a positive impact used as a tool made available to our knowledge workers.
Yeah.
And so others will try, some will succeed, but we'll wind up at the end of the day with the very best talent in the industry, I think, as we always have.
And Philippe, that talent wants to be enabled with the latest and greatest tools.
Absolutely.
John was, though, talking about how the barriers for entry were very low and now they've got higher. But generative AI makes the barrier to entry for new upstarts incredibly low. How, do you not believe in that?
I'm not sure that I would agree with that, because ultimately what you have to have is connectivity to a very, very broad range of capabilities. And so I think that if you're thinking about it in a very reductive sense and you're saying, well, anybody can create a piece of content, sure. But the reality is that unless that content is connected to a very sophisticated platform with a great deal of technology and a lot of data, then fundamentally it's not really very useful to the clients who need accountability, need outcomes, and are very sophisticated themselves.
We are, of course, speaking with Philippe Krakowski of Interpublic Group and John Wren of Omnicom. And John, going back to ultimately this pie that at the moment is being redistributed among new players, it's not just Meta and Alphabet. I mean, ByteDance is in there taking space, Amazon as well. Do you think ultimately the agencies, the four that become three, will own as much as the $1 trillion of the market that it does it today, or will that continue to erode?
Well, many of these players have been competitors of ours now for quite a while. I mean, so it's not new. Some of the tools, some of the capabilities that are being created today, on one hand, will be very welcome and usable by smaller marketers, but larger marketers, I defer to what Philippe was mentioning a minute ago, are going to have to be a bit, you have to bring brand safety into consideration as you do this. You have to bring in considerations, do you have the right to use your image and your voice in my next commercial, even though it might be a perfect setting for what I'm trying to accomplish. So there are a lot of considerations. Europe is different than the US. China's going to be different than everybody else. So that competitive set has always been out there. We, with the resources that we have, defending ourselves in this environment, have been very successful and will continue to be successful. We'll be more successful now because we'll be more focused and we'll have more resources to respond to things that change.
Things that change are like a new administration, Philippe. And everyone's been saying, what about the regulatory outlook? I mean, if you are, it's global jurisdictions here. How confident are you that this deal actually gets through?
Well, to John's point, it's been a long time in the making. We've been very deliberate. So you can assume that, you know, we took advice as we were heading into this, because to your point, we're going to be looking at a dozen or more jurisdictions in which this will need to clear that hurdle. And we have a high degree of confidence that that's something that we can achieve.
Do you have a high degree of confidence, John, just in your client, in the macro perspective that they currently have? How willing are people to commit to big campaigns in this macro environment, as we do have so much geopolitical uncertainty?
Sure. Clients still wake up in the morning and they're running their businesses and they're running their factories and they have to sell their products. Maybe the nature of what they're advertising or the channel in which they're trying to reach their customer change, but that's what we're best at, and the velocity of that change. And people will do different things to respond to the marketplace differently. I think the change in administration is probably a positive thing. I suspect the new administration is going to be more business friendly than anyone's complained about the existing administration. So I'm not anticipating, and we've been well advised, that we have to go through the process. But there are a lot of competitors out there, so that won't be an issue in the final days. Now, the whole focus is on the flexibility and the agility. Right. Even though people who want to tend to look at size and look at the negative aspects of size, we see size as empowering because it'll give us more resource. And what's key is to keep the agility and leave creativity to the talented people that we both have in our employ and are responsible for us both being here today. Right. But enabling them with the best tools, cutting edge, so they can go into the largest advertisers in the world and with great confidence tell them that it's always changing. Nothing, yesterday doesn't exist anymore. It's what's tomorrow, but we're the place to come to.
Thanks for coming to us today. John Wren of Omnicom, and of course Philippe Rakowski of Interpublic Group. We appreciate it. Meanwhile, of course, today Bloomberg Television is having live coverage of an inaugural Women, Money and Power event. It's convening influential women voices in finance to discuss the future of business. Look, they've got to talk AI, they've got to talk fintech in global finance. Just take a listen to what the panel is happening underway.
Then when it comes to a data-driven selection of customers, and this is something that is no border. We leverage all the insight that we can provide, information about the market that, buyers and sellers from different regions in the country can benefit from it.
All of you have talked about this idea of kind of assessing risks, and as we were walking on stage, I heard folks from DeepMind being, we worry about everything, the existential crisis of AI, whose values are encoded in these things, whether it's like misinformation at scale or whatever that might be. What are the risks of the scenarios that you all are describing? What are the risks of having your AI look at a contract and be like, seems good?
Yeah. Well, there are real risks, but I can start being, and it's kind of not a mystery, they're being discussed a lot about, right? I think, for me, the thing I keep thinking is this one. There is a fact which apparently now is uncontroversial, which is in a few years from now, 2050, AI will be the most intelligent being on the planet. There's no doubt.
Elon Musk up at night as well.
Yeah, but by a factor of it, it's not even 10, right? So when you think about that, this is the first time in history that's ever happened. All of a sudden, it can be very scary, right? So, and the risks associated with that are a lot because all of a sudden we could lose control. All of a sudden, in the short term, even we can delegate too much and lose a sense of reality, what's real, what's not real. In the contract, is the contract done well or not? But if you project in the long term, it could be even bigger risk than that, right? So it's about losing control. And so how do we put some boundaries? How can we still make sure we are in control, we are in charge? And I think, I don't think there's a solution yet, but there are probably two ways that needs to be explored in parallel. So one is the usual way of controls and boundaries. So now, for example, which is quality assurance, limitation of the level of delegation. For example, if we now use AI for a contract, of course, somebody should review it. And of course, it should never be...
A human should review it.
A human should review it, right? In the short term, maybe we get to a point where we'll have another AI reviewing it. It's already happening, in applications. So, but that needs to happen. And the other side is, and will be more and more, is ethics, because at a certain point, as the model gets very advanced, you need to ingrain the rules of behavior in the model itself. And that's why I think there is a lot of not only discussion, but study now about how can you make it happen, right? I think that's the main risk. How do you maintain control, but leveraging the power of AI? And it will be fascinating in the next few years to see what kind of solutions come in place.
And Pooty, in terms of the deployment of, digital solutions, in terms of people using their phones for all of these things, one of the realities, I'm thinking about the Apple context, to use AI on an iPhone, you have to have the very latest, most expensive version of what is already a very expensive smartphone. All of you kind of operating in contexts where not all of your customers might have the very latest, most expensive versions of things. How are you including, the hundreds of millions of people who don't have access to spend $1,200 on a device to take advantage of some of the technology that we're talking about?
I think it's very dependent on the community that you're operating in. And what we found, I think certainly when you look at the African continent, with products such as M-Pesa, which is a product that provides access to financial services to people on the African continent, it works on the most basic of mobile phones. And so anybody through the use of mobile telephony can be able to transfer capital or whatever the case is. And in that case, actually, it just shows the extent to which fintech, at its most basic level, has been able to actually, hit through many, many levels of industry that were actually not even there, because the financial industry has not been very robust in many countries on the African continent. And so mobile money has ensured that you can leapfrog that. But, so from that perspective, you can use the most basic phones for some of the most basic products that you can make available, because in terms of sophistication, the level of sophistication in terms of technology is not the same everywhere, certainly where we operate.
Or data access.
Data access, yep. Absolutely, absolutely. So we found it to still, we're able to use it as it's applicable across the African continent. In South Africa, where mobile telephony is very high and you have access to a lot of more sophisticated phones, there you're able to make access to a number of products with the use of AI to consumers that are using, whether it's our e-commerce platform or they're using any of our platforms, our payments platforms, our classifieds platforms, to access our products.
Michelle, when you've talked a lot about focusing on solving the needs of your SMPs, entrepreneurs, what has been like the weirdest problem that they have had in trying to adapt to all of these many changes that seem to be happening at light speed?
Yeah, definitely. When we talk about SMBs, sometimes we're talking about companies with less than 10 people. Already, entrepreneurs, they are multitask. I think one of the challenges for us is first to develop technologies and innovations and AI solutions. I mean, there's a targeting for what they need. And that's where we have been working for over 25 years. And we're very happy to have been, supporting.
You can catch more of Bloomberg's Women, Money and Power event right here on Bloomberg Television. But for now, we check in on these markets as the Nasdaq turns into the red. A key contributor to the downside in the S&P, for example, has been Oracle, off by more than 7% after its forecast did not live up to expectations. And in general, we're seeing 9% growth in revenue, not enough to vindicate the 80% ramp up in the shares we've seen so far this year. Move on to other individual movers that we're seeing. Notable ones to the downside include MongoDB off by 13%. Shares declining significantly. Database software company reporting pretty strong third quarter results, but they also announced the departure of their CFO and COO, Michael Gordon. Markets worrying about that despite the strong results. I'm looking though at MicroStrategy off by 1.5%, Palantir up by 0.7% in a down market. This is, we understand that maybe these names could be the ones next added to the NASDAQ 100. So we keep a keen eye on who's in and out of these benchmarks. But meanwhile, coming up, we go to the private markets, VC investing trends in cybersecurity sector. Enrique Salem is going to be joining us, Bain Capital Ventures. This is Bloomberg Technology. In the first half of this year, Palo Alto Networks Unit 42 reported a more than 4% increase in ransomware victims compared to the first half of 2023. Higher level of activity observed last year was no fluke. This makes cybersecurity a hot sector to invest in if you're a venture capitalist. We got one of them, Enrique Salem, partner at Bain Capital Ventures and former CEO of Symantec. And we're all about this on VC Spotlight, continued focus on cyber. Does ransomware make a keen interest for you?
Well, obviously, it's one of the biggest attack vectors today, and what we're seeing is no one's immune. You've basically got small businesses, hospitals, governments. You saw recently that at Starbucks, the baristas couldn't access their schedules because of a ransomware attack, and you're seeing it pretty prevalent across all industries today.
Affecting 1 in 10 companies each year, according to JP Morgan. What are the best ways of preventing this? How is the technology changing to ensure that we're getting one-of-a-kind founders coming to the space?
Well, so we're always looking to find new solutions to how do you prevent an attack from happening? And that's the key, is first try to prevent it. And what that means is try to understand what is the activity or behavior that a ransomware attack will do, which is ultimately try to encrypt the data on your computer and also exfiltrate it. But the most important thing now is be prepared to recover. How do you make sure that you can decrypt it successfully and get all your data back without having to pay the ransom, which is what they're targeting to try to get you to do?
Has that been some of the most fruitful areas to be allocating right now? There's also just cyber is just so prevalent more generally. We're worrying about supply chain threats as well. Where else have you seen opportunities to be putting money to work?
Well, you talked about supply chain security. We saw the major attack on SolarWinds, which hit 18,000 companies. And what we saw then was an executive order from President Biden that said every company needs to take supply chain security very seriously. And ultimately, that gave rise to a whole new set of companies like StackLock, ChainGuard, and a number of others that are now actively providing solutions to businesses to protect their supply chains.
We find you so interesting because, of course, you were a CEO yourself. You're also appointed to President Barack Obama's Management Advisory Board. You understand how politics works hand in hand with leading businesses. How are you advising your portfolio companies now as we start to look towards the next administration in 2025?
Well, I think it's going to be an interesting opportunity for a lot of companies. The biggest trend that we've all been talking about is AI. And AI is going to completely change how many of our businesses work. The attackers, we've talked about security. What we're seeing is they can be so much more aggressive now on targeted phishing attacks that are custom made to really get somebody to react. We're seeing deep fakes. And so we're telling all our companies, how do you take advantage of AI? And then the new administration, I think, will give us opportunities to drive potentially consolidation, M&A, and we're hoping that the IPO market comes back in 2025.
Enrique Salem, have you back when that IPO market starts to creak open. Partner at Bain Capital Ventures, we thank you. Let's just talk about geopolitics a little bit more. Huawei suppliers are facing more limitations. That's as the US lawmakers are moving to restrict the Pentagon from doing business with companies that sell chips and services to the Chinese company. Bloomberg's Mike Shepard joins us for more. This continues to be the narrative. China-US hostilities dialing up from a tech perspective. Already it was pretty hard if you were supplying to Huawei, but not hard enough, clearly.
Well, apparently not for lawmakers on Capitol Hill who want to bar defense contractors from doing any sort of business whatsoever with Huawei, which is a national champion in China. But here in Washington, it's considered an outcast and pariah. It's been subject to a growing list of U.S. sanctions and export controls that have limited American companies greatly from doing business with Huawei already. And now we're seeing more restrictions coming their way, this time time through the Pentagon. This is likely to become law. The provision is attached to must-pass defense policy legislation that we will see action on in coming weeks before lawmakers leave town for the holidays. So this is something coming down the pike, and companies will have to deal with it within a 9-month span. That is when the provision actually takes effect. And there are very rare exemptions granted under the law that would allow companies to continue to do business with Huawei and the Pentagon at the same time.
Mike Shepard breaking it all down in the latest tit-for-tat tech trade tensions, China-US. We appreciate it. So much more to be dissecting when it comes to geopolitics and the intersection with technology. You can do that by checking out our podcast. But for now, that does it for this edition of Bloomberg Technology. Go recap it all. You can find it on the terminal as well as on online, Apple, Spotify, and iHeart. We leave you with the NASDAQ 100 just underwater by about 12 points. Oracle, a key drag across the technology sector. Chips as well in focus, off by across the board. Alphabet, though, shines as we see continued exuberance around its quantum Willow chip. This is Bloomberg Technology.